Oracle's stock price surged about 24% last week, making it the strongest incline of price since April of 2001. The rally was primarily driven by strong earnings, a positive outlook on its cloud business, and a very high demand for AI workloads on its systems. So many are asking themselves at the moment, why is the stock going up so aggressively, even though it has never shown that performance since 2001, and how could it continue? Is there an opportunity where you can buy the stock? Or should you wait a little and wait for a dip, quote unquote, to get involved? Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick, and today we're going to be discussing the Oracle stock and why it has surged so much last week. We're just going to review a couple of headlines and also a technical review on how the stock price could go and where it could go next before you can possibly put an entry in this. So last week, the company reported the revenue and profit exceeded analysts' expectations. And frankly, that's what always happens if something surprising happens, because analysts, let's be real, they are also people. They cannot predict the future, and models usually fail when you enter an environment of intense speculation. So that is not really surprising to me. With CEO Safra Catz projecting fiscal year sales to surpass $67 billion above the consensus forecast, Oracle's cloud infrastructure business has been attracting major AI players like Meta, OpenAI, Elon Musk's xAI, and further boosted investors' confidence. Now, the AI play was also a little bit dead from 2023. It didn't really catch on. And now, this is a sign from the market that we should pay attention to AI, because clearly Oracle's stock price is going up due to that narrative. Hey, before we continue with the analysis, I just wanted to highlight that we have a free Discord where you can join and interact with us and our community and get to know other people that are on a similar journey, and I would really recommend to do that. And we do also have a premium group where we are analyzing over 180 stocks on a daily basis, where you can find new investment opportunities, and especially at lower prices. Considering that Oracle is quite overbought at the moment, there might be something different that you might find more attractive as a buying operation at the moment. So link is down in the description. I'll be happy to greet you in the Discord. And now let's continue with the analysis. So this means we have a positive outlook on Oracle, and let's continue first with the semiconductors chart. So why are the semis here very important? Well, it is the AI play, because AI is powered by computer chips that can do complex calculations in a very fast period of time, and this is what is fueling AI in itself. So therefore, we have a fundamental driver for Oracle stock price, because good chips make for good AI software. But what do you see here is something that I don't really appreciate for now, at the very least, because what the stock price has done is exactly not anything. You can see from 2021, we have reached a high of 201.85. We surged up to a price high of 257 and then just went sideways. The semis did absolutely nothing in that period. And the question is on if this rally is enough, because there is two cases around it. Case one is that this is an accumulation structure, which means that investors are actually loading up on these chip manufacturer stocks. Therefore, the ETF should push higher with that inverted head and shoulders formation, as you can see here. This would mean that a new bull run that is similar to 2020 to 2021 could arise here with a measured move to approximately $400 to $500 here. This would of course fuel Oracle's price in itself, because that stock is mainly being driven by the semiconductors price action. Now let's have a look at Oracle stock on itself and review what we are currently seeing there. And here we have formed a price channel where the low is the oversold condition, where usually it makes sense to conduct your buying operations, and the overbought condition where the stock price usually forms a peak and comes down again to the oversold condition. This is within this trend. It is one standard deviation from the stock price's average performance to the upside and to the downside. So this is a very healthy trend. What you can see, however, if we extrapolate the trend that was coming from the major crisis that we had in 2000, where the dot-com bust happened, you can see that we are now multiples of that standard deviations above the normal trend. This trend has been persisting since the 2002 low. So this means 23 years this was held in the stock price's performance and was an average performance. But now we have broken out of that channel. This is not something I like to chase, because it tells me that the stock is getting red hot at the moment. It's very highly asked, it's in the media, and this is usually not a good thing if you choose to invest in such a stock, especially not at that price. Because now notice, if we even review the local trend, we have been selling off here, formed an oversold condition in September of 2022. Then we bumped our head on the 2002 trend, and then we formed an ultimate price peak in December of 2024, where we went to the oversold condition again, and now we have formed this other high that is now testing the overbought condition. A safe buy here only would make sense if we found support on this trend line, because this is what would form a bump and run pattern. A bump and run pattern is a very speculative feat where a stock price usually is in a channel, then it leaves the channel, but it leaves it for a very prolonged period of time, and then it basically forms its high and comes crashing down to the trend until the next trend follows. So we could be at the cusp of actually having a very big speculative run to the upside, and this setup would validate it. So I would like to see the trend line being broken. If there is a short and swift consolidation, this would be perfect, because then we could trend to the upside in that similar bump and run fashion. Now, where could price go from here if we choose to continue? And that means we need to hold over here, and we are not supposed to break down. So this case is only valid if we actually do break out and form the bump and run pattern. You can see here that price can be viewed as a triangle, and usually if a triangle breaks out, which is exactly what happened here, we can put on a measured move that would put the bump and run target to about $972. Now this is an extrapolation. It doesn't mean anything. It just means if a speculative run comes very high, this might be the ultimate price top that one might be looking for. Now this means that there is a very high risk, because if this is the ceiling and we are on a log scale, this run could come quite quickly and also succeed as quickly as it went. So in my opinion, it was a good investment at the oversold condition, but in no way, shape or form am I going to hold this one for the longer term, because I would like to see a consolidation back. So what would make me buy the stock, especially if we choose to come down and we enter the oversold condition, and this is where I would conduct my buying operations. Anything else than that, you are putting yourself too much at risk, and in my opinion, it's just not worth that, especially if the reward is great but the probability of that happening really low. We should not really indulge ourselves with such a risk. In that sense, this is where I would buy. If it chooses to go, I'm not involved, but I'm also all right with that, because there's always another opportunity on the stock market. All right, thanks for listening. Until next time, here at Bloomberg Capital.